Good evening, everyone. This is Financial Literacy 101. If you notice, I really haven't been giving any stock tips lately. I've just been kind of buying the time, seeing when is the right time. But I've been doing you guys a great injustice because there's always the right time to invest. Now, I told you a while back, maybe a couple of months ago, that you guys should be increasing the amount of savings that you have anywhere from 6 to 9 months now. We understand that we are in a recession. I've been speaking about this thing for a very long time. I wasn't trying to bring any bad omen. I was just giving you guys the truth nonetheless. Now, as you can tell, here's my stock portfolio on Robinhood, my learning platform, and I'm learning a great deal here as I'm losing $1,000 in one single day. I will also show you here in the past 3 months how much money I've been losing, almost $10,000. So some of you are asking, Ross, do we still keep investing? Do we still, is that a double negative? I don't know. Maybe oxymoronic in a sense, but nonetheless, do you continue to invest? And the answer is absolutely yes. You should keep investing. Don't stop investing. Now, the one thing that should change about your investing is your strategy, how you go about investing. So this is going to be very imperative as you embark in this recession, because if anything, rates may still at the inflation around 8.6%. People are still losing thousands, hundreds of thousands and millions of dollars in the stock market. But it's important when these stocks are on clearance and when these stocks are on sale that you continue to invest. You just need to change your strategy. Now, because of the current market conditions, 3 months, I've lost roughly $9,800 here in the past year. As you can tell, I've lost roughly around almost $15,000. Now, some people probably pulling out their hair, but any money that I've been investing in the stock market, this is the money that essentially I can live without. But I have no inkling on pulling this money out. I have this no thought in my mind to ever pull this money out in case of an emergency. That's the only way I'm pulling this money out, ladies and gentlemen. So as we look at this and we look at my portfolio that I'm almost down $15,000 on the year, I have been changing my strategy of how I'm investing, okay? So when we look at this, I want to show you the other investment platforms that I absolutely lose when we're looking at this. Now, first and foremost, I used to do a lot of videos about Wealthfront. And let me tell you, I'm not promoting them in this particular instance, but this platform is one of the best platforms that I've actually even promoted in a sense, because it does the investments for you, okay? When you initially sign up for Wealthfront, especially using the code that's in the description of this video, again, they will manage $5,000 for you for free, okay? That link is in the description of this video nonetheless. And what I love about Wealthfront and the different investment opportunities that it has all these different sectors of how you should and when you should, and in some cases, how much you should be investing. Now, some of you may not be aware of all the different sectors that you can essentially invest in. As we see here, using Nerd Wallet, we see communication services to financials, even down to utilities, all the different places that you can invest your money. Now, with that being said, let me show you some of the pros and cons here and even the amount that you need to absolutely invest. Now, and again, if you guys are serious about your future, because when I look at this family, the top 3 things in your life, one of them shall always be your finances, should be your financial stability, should be the way that you can move around the economy and having enough cash to feed yourself, your family, clothing, and of course, shelter. So all of these things are very important. So you shouldn't stop investing. Maybe you want to decrease how much you are investing to increase your savings anywhere from 6 to 9 months. But again, Wealthfront being a great platform. Now, there's other great platforms out there that we won't cover today, like Stash. I know I was using Acorn for a time bit, but now I just solely invest on Wealthfront, especially when it comes to my ETF, okay, and index funds nonetheless. So as we're looking at this, family, let me throw that up. Keep that in your head. Here are the pros and cons of Wealthfront. Now let's go over the cons first. There are no fractional shares like on Stash. There's no large balance discounts, meaning that if you have $1 million in Wealthfront, you're not going to get any special discount. But at this point, it's not really even worth it. The platform itself speaks for itself for the amount of investment that it holds and the way they will manage your accounts for you. Absolutely autonomous, meaning you do nothing but deposit your money and you put a rating of the intensity of how you want to invest. Now, when we look at this, okay, you have to start off with a $500 minimum. And a lot of you are stating $500 is a lot of money. Ladies and gentlemen, I know that you've saved up for vacations, you saved up for electronics, you saved up for so many things that $500 is a small amount to invest in your future. What I'm noticing here, family, is that we're putting everything before our financials. We're putting everything before our dollar. See, to operate in this economy, you need money. And if you want to multiply on your money, investing is the way to go. It's the one way I go where I invest my money, that I work each and every day, hardworking American, that it multiplies all by itself. Now, of course, in the recession market that we are now, I'm just simply on thinking about buying shares and stocks at a very, very low discounted rate. But nonetheless, here are the pros. It says here, get 50 customer bonus when you fund your first taxable account, low Etf expense ratios, daily tax loss harvesting, and automatic rebalancing. I don't want to go too in depth in that, but I'm just saying this is very autonomous, where you just put money in every month. After your first initial $500, if you wanted to do $100, $150, they will invest this money for you. The only thing you tell them is the amount of intensity, 1 through 10. Do you want to be very, very risky at 8.5% of your investment inside of this? All of this is depending on the risk that you want to have. Now, I know a lot of people have went into Wealthfront and kind of lowered their risk to kind of save on some of their money, meaning that 1 through 10 rating, 8.5 is high risk. Of course, 9 to 10 is very risky. The lower you go on that rating scale, it's the safer investment, meaning ETFs. Now, here's some comparison that we really want to go over with Sophie and Betterment. You guys can do the research on your own. But I do want to show you this chart down here. Now, again, we went over the 500 for your first initial investment. And they tell you here that first 5,000 is managed for free. Of course, the link is in the description if you want to try this. ETF expense ratios are less than 1%. Anytime you have an ETF or index fund and is less than 1%, more times than not, that's going to be a very low amount that they use to operate that particular ETF or index fund. And if you guys are not familiar with the ETF fund, an ETF fund is just a basket of stocks, usually in the same sector, like blue chip stocks or Google, Amazon, stocks that are kind of dwell within the same industry. That's how you have to look at that's how you have to look at ETF funds as well as index funds. Okay. It says here portfolios that include Wealthfront Risk Party Fund have an average expense ratio of 0.11%. Again, very, very low cost to invest with Wealthfront. Okay. They have a portfolio mix. They're telling you here that they have an ETF from 12 different asset classes, okay? Portfolio generally consists to 6 to 8 recent additions of sector-based ETF. Again, ETF, exchange-traded funds. They also say down here that taxable accounts can opt in for WFRPX. And that's, again, the Wealthfront Risk Party Fund. Moving right along. Social responsibility portfolio options. It says clients can choose to invest in Wealthfront's SRI portfolio or customize any of the Wealthfront portfolio to include social responsibility options for no additional fee. Now, here's a kicker. This is the one that you guys are probably most concerned with. What are the different type of investment vehicles do Wealthfront has, or do any investment platform have? As you see here, not to ponder, individual and joint non-retirement accounts. Okay, those are cash money accounts. That's what I call them. You have Roth, traditional, rollover, and also SEP. That's for those people who are self-employed IRAs. They also have trust. I know a lot of people are now getting into trust, land trust, house trust, fund trust, bank account trust, all types of trust that people have within the market. They're now throwing their money to safeguard their assets inside of trust. And of course, the 529 college savings plan, which if you have kids, you should all have this unless you just have the money to pay for 4 years of college. And then high yield cash accounts, okay? Then tax strategy. I'm in love with their tax strategy because they're always trying to maximize the amount of savings you have so you can avoid taxes. Now, you won't avoid taxes completely, but you won't be paying as much as other accounts that don't readjust your taxable accounts. You see here they have daily tax loss harvesting. Now the automatic rebalancing, free on all accounts. They continue to rebalance your accounts so you get optimal input, you get optimal savings, and you get optimal multiplication of the money that you are investing, okay? So I wanted to run through that very, very quickly. So when you look at an account like this, how am I allocating? How am I doing monthly allotments and still, quote unquote, making money? At this point, I'm just doing accumulation of shares because when the market bounces back, and it will, you will have more shares than people who stop investing at a very low price point. This is a sense of dollar cost averaging. You continue to invest, buying more stocks at a lower price point, buying less stock at a higher price point. But the key to this is you don't stop investing. Have we learned anything from 2008 and 2009, family? When the stock market, once again, the entire economy was in a recession. Family, we are in a recession right now. And I'm telling you, keep investing. Do not stop. Now, going over to Wealthfront, let me just hide that very quickly. Let me get off camera right here, family. I was logged in, but it logged me out. I want to show you my Wealthfront account and what's important of all the different sectors that you can invest in with Wealthfront. This is by far very important for you guys who understand the power and the importance of investing, okay? So let me get this on here. U.S. stocks. These are some of the portfolios that Wealthfront offers for you guys to invest in. U.S. stock ETFs, bond ETFs. Remember, I was telling you that bonds, ETFs, and index funds are the very foundation of your portfolio, not individual stocks. Case in point, Exhibit A. These are individual stocks. These are not ETFs, except for some of the vanguards, but Apple, Grow Generation, Plug Energy, Sundial Growers, Blink Charging, Coinbase, Skills, Print 3D, Robinhood. The list goes on. And I'm down in the majority, over 90% of my portfolio. And for the past year, as you can tell, family, I've lost $14,700. But do I stop investing? Absolutely not. I come over to Wealthfront and I invest into the sector ETFs that deals with certain industries, as we were saying before, right? So as we can tell here, they give you the tickers, but again, everything is autonomous. The only thing you need to do is what? Deposit your money. See, just like anything else, you have your cable bill, your water bill, your rent, or your mortgage. You have all of these monthly recurring charges. Make investing one of your bills. Make investing one of your bills where you absolutely cannot live without. Like, you don't want to live without electricity. You can't live without water. You can't live without your groceries. So essentially, I can't live without investing because I know when the market turns, whenever it turns, everybody's trying to predict when the market's returning. Nobody really knows except those people who's controlling it. But anyway, nobody really knows. But this is the time where rich people go in and they buy the entire stock market because everybody is pumping. Okay, everyone is pumping the stock market by selling their shares, and they're getting all of these stocks at a discount. And I want you to get these stocks at a discount as well. Okay. So as we're looking at this, let me see here. Let me go back one here so you can see the rest of this. This is very important stuff. Now, you don't have to use Wealthfront. Again, I'm not promoting them, but I do have a link in the description if you want to have them to manage $5,000 for free. See, we can't get back over. They have investing strategy ETFs, socially responsive ETF, commodities ETF like oil and what else? Oh, it says right here, precious metals and oil. They got tech innovation ETFs. You guys want to invest into technology, okay? Global ETFs, and also cryptocurrency trusts. So all of these are very imperative for you guys to continue to invest in. Now, they have a very innovative platform that they will even let you know, because I don't want to show my bank account here. So let me blow this up just a little bit. What will your net worth at your current amount will be at the age of 65? Okay, so let me show you this very quickly. So they're stating here, at the age of 65, my net worth will be 1.2 million. And again, I have other investment platforms. So on this particular one, because of the amount of money that I have in there and the projected goals, I'll be worth net worth $1.2 million. So that's why I don't stop investing, okay? Because hopefully I do reach that amount here on Wealthfront nonetheless, okay? Let me see if there's anything else I can show you without divulging any personal information. Okay. I really wanted to show you guys how you change your risk settings here. But I think on Wealthfront, I'm only depositing around $200 a month. Okay. $200 a month. But ladies and gentlemen, at the end of the day, everybody is being frantic, whether it be with your job, with your family. But the one thing that you cannot be distracted with is your finances. It's your very livelihood. And a lot of people are not taking their financial as pertinent as they should be. Now, there's a lot of things that you want in life. You may want a better car, a newer car. You may want nicer clothes. You may want to buy a home or buy homes. Then how can you afford these things if you're not being a good steward of your finances? The first thing that you guys need to be doing is saving anywhere from 6 to 9 months of all of your expenses, especially those are very crucial to your livelihood. That's your rent, mortgage, that is your groceries, of course, your utilities. And of course, if you guys are investing in your 401ks for your retirement on your work side, if you're not self-employed, then you should still have a 401k. And America's Trust is a probably good one for you guys to go ahead. Now, as I'm looking at my Wealthfront account here, when it comes to the trajectory, I'm looking pretty good when you add in all my other investment platforms. But ladies and gentlemen, when it comes to any investment platforms, you should be investing a monthly amount no matter the circumstance. It's just like anything else. I know people who never skip a payment of their Netflix. I know people who never skip going to Starbucks. I know people who never skip certain activities and things they love to do. And if you love to be financially stable, meaning that when you go to a certain place and you start to look in your pockets and your credit cards are maxed out, that tells me a lot about you. See, investing and being a good steward of your finance is a matter of discipline. And if you are putting everything before how much money you have in your pocket, then I would hate to say it, you're not disciplined. Okay. It's just kind of like my personal trainer. If you have let yourself go like me, and that's why I'm back in the gym very hard, then it shows a lack of discipline. And I agree. And so it's now time to be disciplined with your finances. It's time to be disciplined with your savings, because at the end of the day, ladies and gentlemen, the one question that I have for you. If you had all your income, all your assets to stop, meaning that your job no longer paid you, meaning if you're self-employed, you no longer have any clients, how much money do you have in the bank right now, liquid cash? Or how many assets do you have that you can liquidate to suffice your life? That's all I have for you guys today. I really want you guys to start investing and not stop because of the current market conditions, because now everything is on clearance and it's time for you to buy. Good evening, Jermaine Anderson. Thank you for joining me, sir. You guys have a great and wonderful day, and I'll see you on the next one. Learn money and be inspired. I'm out.